Well, Treasury Secretary Timothy Geithner is on his first trip to China since taking his job, and he's working to strengthen U.S. relations with China as the world looks to emerge from a global recession. Fox Business's Shivani Joshi is here with much more details on this. Good morning, Shivani.
Good morning, Alexis. Yes, Timothy Geithner is in China, and his first stop, Peking University, where he actually once studied Chinese in college, if you can believe it. Well, amongst the highlights of his speech, the leadership role the U.S. and China both need to play in guiding the world out of the recession. Let's take a listen to what he had to say.
A successful transition to a more balanced, stable global economy is going to require very substantial changes to economic policy and to financial regulation around the world. But some of the most important of those changes are going to have to come in China and in the United States. How successful we are in Washington and in Beijing will be critically important to the economic fortunes of the rest of the world.
Now, Geithner also added that the global recession seems to be losing force. Two surveys out this morning suggested China's economy is showing signs of stabilization, with the country's manufacturing sector expanding last month as export orders improved. Now, the administration is using this trip to improve relations with China. The two countries have long been at odds over trade. China is significant for many reasons, but particularly because its central bank is a major purchaser of U.S. assets. And Geithner spoke to this today, reassuring China its investment in the U.S. is still secure. Now, responding to a question today, he had this to say, quote, Chinese financial assets are very safe. We have the deepest, most liquid financial markets in the world. Now, last year around this time, China was holding $1.2 trillion in U.S. securities, up 30% from 2007. But China's holdings are actually coming in second, only to Japan. To put this in perspective and bringing it closer to home, the Treasury Department estimates our country's debt runs about $11.3 trillion, with about 60% of the country's debt belonging to the public. Alexis?
All right. Thank you very much, Shivani. Well, for more on which camera? Here we are. Okay, camera 5. For more on Geithner's trip to China and that country's investments in America, John Rutledge, the chairman of Rutledge Capital and global economist. Good morning, John. Good to see you.
Good morning. How are you?
All right. So you hear Treasury Secretary Geithner, first trip overseas to China, speaking to them about the enormous and ballooning budget deficit, or, the trillions we're talking about here.
Yep.
Is he doing a good job, or is he not assuaging any fears?
Isn't it cute? Doogie goes to China, his first visit, and, they are not going to buy his story about us getting our financial house in order. I was there 3 weeks ago. I talked with the vice premier. I talked with the central bank head. I talked with the head of the Sovereign Wealth Fund. All of them worry about why is the U.S. spending so much money? Why is the budget ballooning so much? And why is the Fed printing so much money? They're worried about the dollar and the value of their securities. They're very worried.
It's interesting because we started to see those worries really mushroom in the fixed income markets last week as the Treasury was, doing a ton of auction activity. What advice were you giving them, and were they willing to take that as justification for what could get worse here with the dollar situation?
In part, they were asking me to explain how this could happen here, which is a long story about the Federal Reserve and the crisis last summer. The Fed underprinted and then now is overprinted. They've increased tenfold bank reserves in America since last September. But they are asking what they can do to protect their Treasury holdings. I was suggesting the only real protection you have now, and inflation is an issue now here out a year or two, the only protection you have is inflation-protected securities. If I were running the Chinese government right now and I were talking with Doogie in Beijing, I would say, I would like to negotiate a private transaction with you to sell you back all of your Treasury bills in exchange for inflation-protected Treasuries tips. That's a deal the Chinese would love. It's a deal the markets would not love because they would view that as a total lack of confidence. They cannot sell their dollar assets, though, because it'll move their currency.
Yeah, let's tell people, put this in context. How much does China own of U.S. dollar-denominated assets, and will they ever step away? I mean, if there is a concern about the future of our debt rating, or do they need us? Are they contingent upon us?
What people don't know here is that China holds U.S. securities for the same reason the Federal Reserve owns U.S. securities, because that's how they control their money supply and their bank reserves. When they fixed the yuan against the dollar in 1995, that essentially ceded control over their ownership of U.S. securities to the Fed. They were forced in 2005 off of that by the U.S. It was a disaster. It brought speculators into the Chinese currency. The leaders now have decided they don't want to do that anymore. I think you're going to see the currency going back to being fixed. China is actually talking with neighbors about trying to create a euro for the Asian area with China and the yen and other currencies banding together, because they don't believe they get the stability out of the dollar that they once did, because our policies have gone crazy here.
Very interesting. You know, Treasury Secretary Geithner is over there right now with one of the largest bankruptcy filings in U.S. history. What can he say today, given the fact that we're in the bank business, we're in the insurance business, the auto business, who knows what's next? I mean, when you look at the press releases, some of the details about what they're saying later on in this conference today, at this press conference, they're sort of trying to quell the fears that this is something they're going to do in other industries, but they're leaving the door open.
They've already nationalized banks here, and now the auto industry. I was in a cab in Beijing several weeks ago, and on the drive time news in Chinese was a survey from the local newspaper. They asked people, is America becoming more socialist just like us? 65% said yes. So they view this as a big shift to the left in the U.S., but you're going to see calming statements out of them about the dollar, about treasuries and the like. But the bond market has already got inflation and a whiff in its nose. The yields are up 100 basis points already in the last several weeks. And there's a lot more coming. You can see it in the commodity markets, because whether it's copper, lead, zinc, aluminum, coal, all up. So
even oil at $68 a barrel.
Absolutely. So oil and metals are the biggest piece of my portfolio right now. The banks right behind them, because the government's doing anything they can for the banks. And the third is China growth. China will grow 8% this year. They'll pull Southern Asia with them, because that's where they buy their commodities from: Indonesia, Malaysia, Australia, and New Zealand. And so that part of the world is doing great right now.
All right. Well, John Rutledge, as always, terrific seeing you. And I know they had a couple manufacturing numbers earlier this evening that were very good, and they've led a little rally there. All right. Thank you.
Thank you.
Appreciate it. Coming up.